So today we're going to be looking into SCHD, the very popular US dividend equity ETF. We're going to look at its performance, see how it's holding up, the returns, the dividends, and see how it can compare to the S&P 500. So let's get it started. So this is the Schwab US dividend equity ETF. As you can see here, the total expense ratio for this ETF is at 0.060%, which is obviously very low. So just to give you an idea, 0.06% on $10,000, let's say, will give you a cost of $6. So on $10,000 invested, guys, you will be paying $6 annually. All right, so let's follow up here. So SCHE's goal is to track the total return of the Dow Jones US Dividend 100 Index, as you can see here. So this can definitely be an ETF that's part of your core investments. So let's look into it. So let's see here. The fund was in fund inception is in 2011, so it's been quite a while. So we have good data to see what returns we're talking about here. It has 103 holdings, as mentioned here. The goal is to track the Dow Jones US Dividend 100. So obviously it has around 100 holdings. And what else can I see here? You see the assets under management here is really high. It's a very popular ETF, obviously. The yield is at 3.42%, which is a pretty good yield for an ETF that's obviously still concentrating on growth, and it's not an income ETF. So you're looking at 3.42%. Now let's look at the performance. So for the SCHD, guys, for the last year, annualized returns here. So you have a 13% return for the last year. The 3 years you had 6.45 because we had the dip, and 5 years average is at 12.78, and a 10-year average of 11.70. So these are really good returns. Obviously, it's a good overall ETF that offers decent dividend and a good growth overall too. And since inception, it's at 13.28%. All right, so now let's look at the portfolio real quick. So you see here the top holdings. You have AbbVie at 4.5%, Lockheed Martin. You have Home Depot, BlackRock. So you see Cisco Systems, Coca-Cola, obviously a big one. You see all these top holdings are stable companies that they've been around for a long time, that they have constant dividend payouts, and you see here the market value of each one. So obviously very big companies. So you're basically diversifying in these blue chip companies that have good returns and good dividends through time. So the sectors, you have 17% in financial. Financial is always often a sector that offers stable dividends. In healthcare, that's a good one too. Consumer staples at 15%. Industrials at 13, energy at 13. Also, energy is another big one that can give a lot of dividends through time. That's consistent through time. And then you see a bit less of technology here, materials, and then utilities, which is the lowest one at 0.03%. So now that we have a good idea, let's look at their distributions here. Pretty stable, pretty constant. So you can see here, paid quarterly. You can look at the distributions, the total of distributions here through time. So it is paid quarterly. They're not missing any quarters here, so you can go back to the history and see what it's giving out. Now let's look at so we spoke about its performance. So let's compare quickly to the performance compared to the S&P 500, so to the general market, see what it's looking at. So here, if you remember, guys, we're at 13.32% for 1 year and 12.78 5-year, right? So let's look at VOO, one of the biggest S&P 500 ETFs. And if you can see here, the performance for 1 year is at 22%, and at 5 years is at 14.95%. And since inception in 2010, you're looking at 14.51. So compared here, Schwab is the inception was a later date, but you're still looking at 13.28% since inception compared to 14.5 for VOO. So that's really good returns, guys, for considering the market and these blue chip companies that are stable, that are strong companies that pay out dividends with no issues. So now let's look at quickly if we had invested $10,000 since the inception of SCHD in 2011. if you had invested $10,000 in SCHD and $10,000 in VOO. So you can see here the average annual return is at 14.5 and SCHD is at 13, guys. So that's really good returns compared to the S&P 500. So this can definitely be a core holding in your portfolio if that's something you're looking into. So that's still, that's the data after almost 13 years. So that's good data to kind of understand how the ETF functions and what kind of return, historical return we're looking at. And here in the case if you didn't invest any of the dividends and if you've held all the dividends, so VOO here you're at 13.37 and SHD you're at 11 and a half. So once again, really good returns. So let's say you had reinvested all the dividends, you're looking at your $10,000. What is that? 2011. So almost 13 years later, we're looking at $56,000 now versus SCHD. The $10,000 is at $48,000. Obviously, the longer it goes, the more compounding you get. The bigger that gap will become, obviously, because of the returns and the dividends reinvested. So that's pretty much it, guys. Let me know what you think of this video. Let me know what you think of SCHD. Is that part of your core portfolio? How do you see it, long term compared to the S&P 500? Don't forget to like and subscribe if you like this content, and let me know if you have any ideas for any future videos I can pull out. Continue exploring the dividends, and we'll see you guys soon.